Hi everyone. The other question we've seen is how do I record the issuance of stock for cash if the stock has a stated or par value? Now this is something we're going to cover in more detail in chapter 11. I apologize for those of you who've struggled with this a little bit, but it was important to us that you got as much time to work on the case over the semester as possible. So there are a few things that we've gotten ahead of ourselves a little bit with on this case. So for the stock value, I've created a new journal entry here, a new transaction, and then two alternate journal entries. The first one, we have a situation where we're saying that this 20 shares of stock that was issued for $35 per share of cash has a $5 par value. And in the other one, there's no par or stated value of the stock. So we're asked to record the entry for the issuance of stock. So the first journal entry and the second journal entry have something in common. In each case, on December 20th, we'll use 2016 since that's what we're doing in the case. 2016, the company is issuing stock for cash, okay? And if they're issuing stock for cash, our transaction is going to bring more cash into the company. So in both cases, we are going to debit cash, and to figure out how much cash, we are going to look at how many shares were issued and how much per share the company. Sorry, I just paused you for a second to format this so it looked a little neater. Okay, so when we look at the cash paid, let's just come down here to the bottom and give ourselves some workspace. 20 shares times $35 per share, right? And this is cash. $700, right, for all these shares. So the company is going to receive and debit cash for $700. And then we're going to change a little bit what gets credited. Okay. In both cases, the company is issuing common stock. So we need to have a credit to common stock. We'll keep this consistent. You do not have to capitalize these in your case, by the way. Okay. So when stock has a stated or par value, okay, then we're going to have to use that when we record our common stock. So in the first example, the stock has a $5 par value. 5 times 20 shares gives us a $100 credit to common stock. Okay, so we're going to drop in that 100. Now notice our debits and credits aren't in balance. We have to record a credit to another account. That account is called additional paid in capital, but you can abbreviate it for the case and in general to APIC. Again, additional paid in capital. That's a plug amount. The other $600, that $700 of cash, 100 of it is attributable to our common stock's par value of $5 per share. The remainder is recorded as a credit to additional paid in capital. So that's where that $600 is coming from. Now, if the stock doesn't have a par or stated value, you're looking at a little bit simpler transaction. We're just going to record a credit in the second one to common stock of 700. Okay, so common stock here, and you don't have to type this into the case, this is a $5 par value. Okay, and our additional paid in capital is the remaining. Now, the other way you can do this is the additional paid in capital is the other $30 per share times 20 shares gives us $600. I hope that helped you with this one. Let us know if you have any questions. And remember, just keep entering in your date, right, consistently. Use your chart of accounts. Make sure you watch that. Don't type these extra things into the spaces in your Canvas quiz because it will mean you'll have to wait until we auto grade it to let you know if you were right or wrong. Okay, thank you.